Welcome to Good as Gold, hosted by Nick Grovich, a show dedicated to helping you understand precious metals and rare coins, how to avoid the pitfalls when buying, and how to understand the inner workings of the precious metals markets. Have a question? Call our local office at 1-800-221-7694. That's 1-800-221-7694. Or visit us online at www.americanfederal.com. Now, here's the host of Good as Gold, Nick Grovich.
Hi, Nick Grovich with you. We're live in Phoenix again this week. If you have any questions to ask while I'm on the air, call the radio station at 602-324-1510. If you have other questions, feel free to call the office at 480-553-5282. Almost forgot my own phone number. So I spent a few days up in Seattle visiting clients this week, and I got back last night. I want to talk a little bit about what I ran into on that trip. It might be pertinent to some of the things going on with your portfolio, especially if you bought coins from some of the bigger dealers. There's some things going on that you need to be aware of. Some things that the brokers are doing. They're getting very creative in buying coins right now, but much of it's to the detriment of the client. So I just want to talk about that a little bit. But first, I'm going to see if I can't come up with a question or two for you. And then I had someone who listens to the show on YouTube, listens to the podcast, and they emailed me a question they'd like answered. So, that's another way, that you can ask questions. If you don't want to call in, or if you're listening on YouTube or one of the podcasts and you have questions, you can email me, and the email's info@americanfederal.com. My personal email is Nick, N-I-C-K, @americanfederal.com. Info@americanfederal.com is probably the safer way, because I get 1,000 emails a day, and occasionally they do get lost. So first, let me talk about the question that a listener had. He says, "Hi, Nick. I'm not able to hear your radio program live, but I listen to you online. I was hoping you could answer this question for me. I'm a small investor. I try to dollar cost average between $100 and $200 a week into precious metals." By the way, that's something we can do for you also. I do have a lot of clients. They want to spend $100 or $200 a month or a week, and if you're out of state, a lot of times what we do is we'll buy coins for a month or two and then ship them all at once. It saves you a lot in shipping costs. And if we can get up over a certain amount of if we get up over $1,000 or $2,000, depending whether it's silver or gold, if we combine the shipping into one package instead of 5 or 6 packages, I don't have to charge you for the shipping. But again, call the office if you have questions about that. But we're happy to help you if you just want to spend a couple $100 a month or a week. So he goes on to say he mostly buys silver bullion, eagles, maple leafs, and pre-1964 silver coins. And he heard me talking about low mintage, fractional gold eagles, and platinum bullion with the hope one day they will demand a higher collectible premium. And I do talk about that quite a bit. And he says, I was wondering if there's any similar coins in the world of silver that you think might accomplish the same thing. One specific coin I'm interested in is the 5-ounce Silver America the Beautiful silver coin, because most mintages range from 20,000 to 35,000 pieces. Do you think they have a long-term potential above and beyond the silver content, or should I stick with eagles and maples? And then he says he's looking at other foreign coins. I think this is a really great question, and I'm really glad to get it, because apparently I'm making my point about buying bullion coins with lower mintages. The America the Beautiful coins, it's a 5-ounce silver coin. It looks like the quarters. If you've seen I'm sure everyone's seen the state quarters and the territorial quarters, where they have a different state on the back or a different national park on the back. The 5-ounce silver coin is just big. It looks like a coaster, but it's a giant quarter. They actually call it a 25-cent piece, which I think is kind of crazy, but it's just a giant Washington quarter. And I think they're a really great coin. It's 5 ounces of pure silver. They are very low mintage coins. I printed this out in 2000. They started making these in 2010. And the mintage, I think in 2010, I can't find that page, was about 33,000. The mintage in 2011 was higher. They went anywhere from 48,000 up to 126,000. But then the following years, 2012, they make 5 different coins every year. 2012, the minages go from $20,000 or 20,000 coins to 25,000 coins. 2013, you're between 30 and 35,000. Pretty much the same for 2014, 2015. So they are, for coins, they're actually very, very low mintage coins. One of the reasons you don't see them that much is that when the mint initially released these back in 2010, they had a huge distribution problem. I don't remember all the details, but I remember they were limiting the amount that dealers could get, that the distributors could get to supply the dealers, and it just turned into a huge mess. And there's several distributors. What the mint does is they give them to the distributors sell them to the dealers. And several distributors just refused to carry the coins at all because, like I said, the first year, the whole distribution program was a mess. I know one major distributor it cost him a lot of money the way that they handled it. And so he just decided he hated the coins and wouldn't carry them anymore. So they started off on a bad foot, and a lot of that had to do with the way the mint distributed them. They have collector issues you could buy from the mint, which costs more, or you can buy them as a bullion coin. Now, the thing I think is great about them, they do have very low mintage. I mean, it's a huge coin, so it's the U.S. has never made anything that's 5 ounces like that before, and they're really priced more like a silver bullion coin. They're priced very comparably per ounce to a silver eagle. I think they cost maybe 50 cents an ounce more than a silver eagle. So basically, you're just buying silver bullion, and you're getting it in a 5-ounce coin. You're not really paying any more than you're paying for a silver eagle, and you're getting something that's actually a very, very low mintage coin. So if you like silver bullion, I think that's a great way to go. You could buy them by the tube. I think they come 10 in a tube, or you could buy single coins, or just like silver eagles, you can buy a box, which would be 500 ounces of silver. So you can buy them the same way as silver eagles. They're just as liquid. They're just as easy to buy and sell. So I think that's a great question. There's a lot of other ways you can go if you're looking for bullion coins that have lower minages. I will tell you, I would stay away from the foreign coins. This gentleman asks about kookaburras and pandas and Perth mint issues. Most of the foreign coins just don't have the following, so you don't get that. You don't have the potential for a collector's market. And I notice a lot of the retailers that sell them, they'll get them graded by PCGS or NGC and charge big premiums for them. So you don't want to get caught up in that. You don't want to pay big premiums for them. We're going on a break here, and when I'm done, I'll talk a little bit more about this, and then we'll get started about my trip to Seattle and a couple other things I wanted to mention on the show.
Once again, here's Nick Grovich.
Okay, I'm back with you. Before I go on about the silver coins, everyone's making fun of me for the kookaburra. The kookaburra is a 1-ounce silver coin from Australia. So there's a variety, as most of you know, there's a wide variety of 1-ounce silver coins. Some have funny names like kookaburra. It's kind of fun to say. But if you buy those types of coins, just buy them based on the silver. So if silver today is just under $16 an ounce, if you're buying 1 or 2 of them, you might pay $20, $22 a piece because it's, when you're buying 1 or 2 coins. But if you buy in any kind of quantity, if you buy a roll of 20 or you buy, a couple hundred at a time, you're probably going to pay a couple dollars over spot for them. What I see a lot is dealers will get them graded, and they'll grade them MS69 or Proof 70 or MS70, and they'll charge $50, $60. The Chinese pandas, I see one retailer sells them for $150 a coin. The pandas, you're kind of jumping in after the fact. That was a good coin to buy back in the 90s and the early 2000s, but today they make so many coins that there's not much chance that these are going to become collectible. So if you're paying $60 or $150 for $16 worth of silver, you're already paying the collectible premium for it. And the problem is if it doesn't become a collectible, you lose the difference and you end up with $16. So I like to do it the other way around. If you buy, the Silver Eagles, I'd buy the older dates, 1986s, 87s, 91s, 92s, 93s. By the older dates, you're going to buy them for roughly $20 a coin, give or take, and you're basically buying them as silver. And if someone promotes them or they become more collectible than they are, because they are somewhat collectible right now, and the price goes up, then that's your gain. But if the collector's market falls apart or it doesn't really develop that well, you didn't pay all that money up front, so you're not losing anything by buying those lower mintage coins. The one thing I'm going to mention, whether it's gold eagles, platinum eagles, or silver eagles, and this actually works to your benefit, is that it's a really funny market because those coins were, for the most part, sold to bullion buyers. In other words, people who are looking for gold, silver, or platinum, a lot of times will just buy the eagle coins. They're considered a bullion coin. They trade every day based on whatever the spot price of the underlying metal is. So most of the buyers who buy those coins are just simply buying precious metals. They're not buying a coin per se. They're not buying a collectible coin. So when the collector's market gets involved and collectors decide, for example, to put together sets of half-ounce gold eagles or sets of platinum eagles or sets of silver eagles, which are very popular, they're in a different market. And dealers will react, of course, to what their buyers want or to what they're promoting. And oftentimes you'll see a dealer that's looking for a certain date to complete a set, because dealers are usually buy roll sets, which is a roll of every year. And they'll put together 20 or 100 or a couple hundred sets at a time. So let's suppose you're putting together 200 sets and you're short 50 coins of one particular date. Well, you're not really going to mind going out and paying $50 or $100 for that one coin you need to free up hundreds of thousands of dollars worth of inventory. So they may go out on the dealer exchange and say, well, for example, I need 1986 Silver Eagles and I'll pay $50 a coin for them for however many they need. So that's how that collectible market gets going. But because most of the people who own those coins own them as gold and silver, they're not watching the collector's market. So it's interesting. Last year, that market was really red hot. And there were some of the years that they were looking for example, a 1986 half-ounce gold eagle, which is actually one of the highest mintages they made of half-ounce gold eagles. And that coin was going for $1,000 wholesale. So if you were looking at just the mintages, that's probably the last coin you would buy. But you have to remember the guys who own them, the people who own those coins, they're not watching the collector's market, so they don't have access to that information. And most dealers just don't pass that on. They don't pass that information on. That's one thing we try to do at American Federal. We really try and pass that information on. Even though you may buy a coin as gold bullion, when we see a collector's market develop, we send out an email or give you a call and let you know that that coin's gone up to $1,000 a coin, and you have a chance for profits. But like I said, most dealers don't do that, and most of the people who own the coins don't have access. They don't know that. So the collector's market could double, triple, quadruple, and the people who own the coins don't know that, so that the coins don't come flooding into the market. So to me, that's a great reason to buy those coins if you have someone who's watching that for you, or if you have access to watch that somehow with the gray sheet or something like that. Because if you have the right date coins when someone needs it, the market's not going to get flooded most likely because the bullion buyers simply don't know about it. So it's kind of an interesting market. I did want to ask a couple questions here. I have trouble thinking up questions to ask. I try and come up with questions that you can't just look up on the internet that easily, and that's kind of tough to do. So here's something else. If you have an idea for some good trivia questions about precious metals or coins, I don't want you to call me here. I want you to call the office or email the office. Again, that's info@americanfederal.com. Or call the office if you're watching on a podcast or something. The national number is 800-221-7694. The local number is 480-553-5282. So call the office, and you could leave your trivia question. If I like it, I'll send you a Silver Eagle if I use it. But today I have two questions. The first one's pretty easy. Name two items that Benjamin Franklin was involved in. Not necessarily that he was on, although some of them could be, but two items that Benjamin Franklin had influence on in the numismatic or currency world. And then I'll talk a little about that later if someone gets that. And the second question, which I think most collectors, I would think, would know this. In 1853, the government added arrows next to the date. So 1853 until 1855, the dime, quarter, and half dollar, next to the date, there was an arrow on each side of the date. And then again in 1873, they did the same thing. So to win a Silver Eagle, you don't have to tell me why they did it for both years, but why in 1853 or 1873 did the government put arrows next to the date? What were they trying to do? So there's your two questions. Two items that Franklin had something to do with. Either he's on or had something to do with. And the second one is, why did the government add arrows to the date in 1853 and 1873? And the phone number here at the radio station, if you have the answer, is 602-324-1510. You know, there's a lot of people right now with gold and silver down, and with the coin market. I mean, the coin market this year has also been down. I watch the coin indexes and the market, no matter who you look at, PCGS or Certified Coin Dealer Newsletter, prices are down on coins this year. So a lot of people are throwing in the towel. They're selling out, and I've been buying an awful lot of bullion lately, and a lot of coins. And on my trip to Washington, I ran into something that one of my guys, Don Gauze, has been running into here lately too. People will call up. They have a portfolio. It seems like it's mostly $20 Liberties and 2.5 Indians that I see this happening on. And they have a portfolio that they might have spent $150,000 or $20,000. The amount doesn't matter, but they're finding out it's worth about half to a third of what they spent on it. And they're just tired of owning coins that for the last 20 years haven't done anything for them. And so I don't blame them. I would actually recommend, if you're sitting on coins that haven't done anything in the last 20 years, maybe it's time to reevaluate what you're holding and why you're holding it. I mean, if you just love the coins, that's one thing. If it's an investment, you might want to reevaluate and see if you could put your money to better use elsewhere. And I'll give you an example. I just met a lady yesterday while I was in Washington, and she had a portfolio. I went through, I usually take my computer with me, my little laptop, and I look up, while I'm there, I can look up the last prices paid. I can look up what dealers are willing to pay. I can look up what the coin went for at the most recent auction. So there's a lot of good information right at my fingertips. And I looked through her coin. She had paid $123,000, and I valued the portfolio at $44,000. And maybe if she let me take my time and consign it and sell it, maybe we get a couple $1,000s more. But it wasn't going to be worth a whole lot more than $44,000. So when I got done with that, she said, "Well, I called several dealers, and most of them are right in the same ballpark as you, but the dealer I bought it from is telling me it's worth $85,000. Well, there's a heck of a big difference between $44,000 and $85,000. And what's happening is a lot of this one particular dealer is simply, he's using what we call an in-house bidding system. In other words, his prices have nothing to do with what the real market is. I don't know if he thinks you feel better because it's worth $85,000 than $45,000. I guess you would feel better, but if you paid $123,000, you're probably not feeling very good about either number. But some of the prices that he had on there, I could look on my computer and see that there were coins for sale for much less than what he was saying the coins were worth. Now we're going to cut for a break. I'll get back into this right after the break, and I'll give you some more information on this.
Once again, here's Nick Grovich.
Okay, I'm back with you, and I'm talking about something that I've noticed in the market where people are looking to sell their coins, and they talk to not just me, but several dealers, and they get prices that are pretty close. I mean, generally you probably get pretty close estimates if you go to any dealer who knows what he's doing. And then the dealer they bought from is telling them it's worth twice as much. And of course, what that does, and I get it, if somebody's telling you your portfolio is worth $85,000 and I'm telling you it's worth $44,000, of course you want to believe the $85,000. The problem is no dealer out there is going to pay double what something is worth. So I look at it and I immediately don't trust it, because that those coins that he is saying are worth $85,000, I know I could go buy those exact same coins for, if I'm saying it's worth $44,000, even if I overpay, I'm going to go buy them for $50,000 or $52,000. So why is the dealer you bought them from going to pay you $85,000? I guarantee people think that they're going to go back to their dealer and they're going to get them. I got him now. He made a mistake and I'm going to get him. You're not. You're not going to outsmart the dealer. I guarantee you're not going to do it. The other thing I get is, well, he's my friend, or he really likes me, or I spent a lot of money, so he's taking care of me. I guarantee you when they're sending out indications of value that are double what it's worth, he's got a line a mile long of people who are thinking the same thing. They're going to take care of me. They like me. They're going to treat me right because I spent so much money. And so what happens a lot of times is a couple different things. Number one, and I'll go into this in a minute because I had the lady actually call the dealer while I sat there. Number one is they're going to try and just put you off. The minute you say, I want to sell and get my money, well, you're going to notice on the appraisal that they sent, it says right on it, these are indications only. They are good only the day they were sent out, which was 3 days before she got it. They're not offers to buy. They're just indications of what they think the value of the coin is. So in other words, it doesn't really mean much of anything. And they won't really give you a price until after you send them the coins. So you have something that says it's worth $85,000. You could send the coins and then see what you end up getting back. With this lady, what they did before I got there is they bought her platinum eagles, which is, like I said before, it's just basically a bullion coin. So they bought the platinum at the current price of platinum, which is easy. You could do that anywhere. And the reason they do that, of course, is because they could take platinum and turn it into cash overnight. They're not stuck with inventory. They're not stuck with something they have to find a buyer for and go sell. So I had the lady call, and her broker gets on the phone. First thing he says is, "Oh, so-and-so, I love you with all my heart." And I about fell out of my seat. And then he went on, "Oh, your coins have gone up since we sent you that update. It's worth a lot more than that now, but I can't talk to you right now because I have to go in for an MRI, so I'll have to call you back another time." And, then they just kind of talked a little bit back and forth, and she got off the phone with a smile on her face and, "See, he's my friend. He's going to take care of me." And I said, a friend, if he's your friend, he sold you $123,000 worth of coin that have a bid value of about $50,000. I don't know. My friends don't usually charge me $70,000 if they're really my friend. But I look at this, and it's hard because he has an emotional attachment to the clients. They're very, very good. They make you feel good. Most of the clients that I talk to are elderly, and so I think they love the attention. But I think it clouds reality. In her case, just give you one example, she had a 1908 $10 gold piece that she had paid just shy of $15,000 for. And like I said, I don't make up the prices. I have the computer right there. I can show you what's gone on. So I pulled the coin up, and we could see that another identical coin had just sold at auction for $6,000. So when I talked to her, I said, "Well, I think the coin's worth $6,000. Here's an identical coin that just sold within the last 2 months for $6,000. There's a couple other coins that sold in the same price range. And if I look at what dealers are willing to pay, there's nobody willing to pay more than $3,500 for it. So $6,000 a coin traded for that, that's probably a good starting point on where the value is. On their sheet, oh, and by the way, there was one for sale for $7,000. But on the list that she had from her dealer, he was telling her the coin was worth $10,000. I guarantee you, he's not going to pay her $10,000 when he can go on the exact same network that I'm on and buy the same coin for $7,000. It's not going to happen. Now, this is what happens sometimes. Another client actually did go and send his coins back, and he got a coin back. What they did is they sent him a small amount of cash. So they wrote him a check for part of it, but then they sent him a coin for a little more than half of what he sent. So this client got a check for I don't know what the exact amount, $10,000, $20,000, but then he got a coin for $86,000 as part of his payment. The problem again is, on paper, the client's very happy. He looks at his sheet, he looks at the invoice and says, look, they paid me $120,000. I did great. I made some money. But the coin they sold him for $86,000 is only worth $30,000. So did you really get paid the $120,000? No, you really didn't. You really got paid $50,000 or whatever that number comes out to. So now he's got a little bit of cash, and in his mind, the dealer performed, but they're not going far enough and say, okay, so I got this coin in trade for $86,000. It's worth $30,000. He's just back in the same boat, and now on top of it, he's probably 30% farther behind than if he would have just taken the loss in the first place. And I think sometimes, and I don't know this for a fact, but what I'm thinking is their goal really is to just try and put you off, just try and delay you from wanting to sell your coins. And that's why they want to make it sound better. They want to make it sound as if they're paying a lot more, and other dealers don't know what the coins are worth. Only they know that it's worth that much. And like I said, I get it. Everyone wants to think their coins are worth more. When if I'm offering a 44 and they're saying it's worth 85, of course you want to wait for the 85,000. Well, the one client I visited, he spent $250,000, and a year ago when I first visited him, maybe a little more than a year ago, his coins were worth almost $200,000. And because they kept muddying the waters with these ridiculous values, he kept holding on and holding on. He's held the coins. He's been going back and forth with this company for 2 years, he told me, to try and get them to honor the bids. Well, in the meantime, his coins have dropped from almost $200,000 to $95,000. So when he finally realizes that after 2 years he's not going to get paid those big numbers, his coins have dropped in half. So he lost another $100,000 by trying to wait out something that just doesn't make sense in the market. And I don't know the answer, but if somebody's going to buy your coins, they should send you something in writing that says, we will pay you X number of dollars. Now, a lot of times, if you let a dealer shop the coins, we do this all the time, we'll put in writing, we'll guarantee you X number of dollars, but if you give us a couple of weeks to shop the coin around, maybe we'll get you more. But we put a guarantee. In other words, we guarantee at least X number of dollars. If a dealer is going to buy your coins, there's absolutely no reason why they shouldn't put that offer in writing. And it shouldn't have a lot of disclaimers, and it shouldn't say anything about, this is today's market, we don't know what tomorrow is, and the price is based on our inventory. They should say, we're going to pay X amount. And that at least gives you some kind of guarantee of what you're going to get. If the dealer's not willing to put in writing what they're going to pay you, then you don't have a trade. The numbers, they could tell you it's worth $1 million, and that it might make you feel better, but it's not going to put any money in your pocket. So you have to really be careful. One last trade that I'll tell you about, and it's the exact same thing. I came up with an offer of $20,000. Again, I show people the numbers. I show them the same thing every deal in the country is looking at to get the prices. And he was offered $28,000. So he got a check for $12,000 and he got a coin for $16,000. The problem is, as I go on to the dealer network, I see the coin that he paid didn't pay, but he got in trade for $16,000 is available online for $3,500. So again, maybe he feels good seeing that $28,000 on an invoice, But the reality is he got $15,500 for his coins. I think $20,000 sounds better than that myself. So why am I telling you this? I'm telling you this because in the last week alone, I've run into 4 or 5 of these transactions. And, in every case, I think the people just felt comfortable because the brokers are very friendly. They talk about their kids and their families, and they ask how you are. And this guy told her that he loved her with all his heart, which I thought was a little overboard. And discuss their medical problems and everything else to try and build up some rapport, I suppose. But either they're going to pay you or they're not, and that should be really obvious within the first 5 minutes. If they don't call you back for 2 weeks, that probably tells you they really don't want to buy your coins. If they wanted to buy your coins, they would be just as anxious to call you back to buy the coins as when they sold you the coins. It's interesting. When most brokers are selling coins to you, they'll call you 10 times a day, and they don't let up until they talk you into buying a coin. And when you're trying to sell to them, they're away. They're on vacation. They're at the doctor. Something happened. They broke their leg, but they're never available to take your call anymore. And again, that's just an indication they really just don't want to buy the coins. And usually the reason is because they've quoted you more money than what the coins are worth. Otherwise, they'd be happy to buy it. We'll be right back after this break.
Once again, here's Nick Grovich.
Okay, I'm back with you. I've had no one call to answer the 2 questions. I'm going to repeat them. And George, if you're still out there, since no one's answered them, feel free to call back in. Usually I don't let the same person answer every week, but since no one's gotten these, I'll open it back up. So the first one is name 2 items. This one's actually very easy. 2 items that Benjamin Franklin is either on or had something to do with, and we're including coins and currency in this. Extra bonus if you could tie this into the first coin. There's a big hint. First coin the U.S. ever made. The second one is, why did the government add arrows to the date in 1853 or 1873? For collectors, that second one should be fairly easy. The first one should be really easy too, because there's two items that are really, really easy. So before we end, is it George? Hi, this is Nick.
Hi, Nick.
Hi. Who's this?
This is George.
Hey, George. How are you?
I'm very well, sir. How are you?
My most knowledgeable client.
Well, a very loyal listener. Let's put it like that.
Well, I appreciate that.
Yeah.
So which
Ben
question?
Franklin.
The Ben Franklin?
He's on a $50 and he's on a $100 bill.
Correct.
Yeah.
Now, do you know anything about the third part of that?
Tell me that. I think I may have heard that, but I cannot answer that part.
All right, that's the tough part. But I'll send you another Silver Eagle unless you want to stop in the office, and I'll talk about the last tie-in to Benjamin Franklin.
Okay.
All righty. Thanks, George.
Thank you very much.
Uh-huh.
Bye-bye.
So Benjamin Franklin is believed to have designed and come up with the legend on the first coin that was authorized by the United States. It's called a Fugio cent. And if you're a collector, you've probably heard of them. You probably have seen them at different coin shows. It was the first attempt at making a copper coin. They bought, I think it was 3 million pounds of copper to make this coin. Fugio means time flies, and they were made in 1787. And behind, on the back, is a sundial, and it says, mind your business. Now, a lot of people change that, and they say, well, Benjamin Franklin put mind your own business. It's not mind your own business, it's mind your business on the back of the coin. And the reverse of the coin has 13 chain links. This is where they got the design for the 1793 chain cent, and they're all linked together to show unity. There's a couple different varieties. They both say we are one, and it has 13 chain links, but it's the first coin that was authorized by the United States. Benjamin Franklin is credited for designing it and coming up for the legends on the coin. So that's where Franklin is tied into the first U.S. coin. Sometimes they call it the Franklin cent. It looks like I have another caller. Hi, this is Nick.
Hey, Nick, this is Eric, and I want to take a stab at your other question.
Sure.
The reason they put the arrows next to the dates is because they changed the weight on the silver of those coins because the value of silver was fluctuating, and as a way to indicate to the public and the merchants that this weighs differently than the previous one, put the arrows on there.
That's absolutely correct. Very good.
Very good.
Thanks, Eric.
All right, you're welcome.
So in the past, the government was a little more honest about it. In 1853, as Eric mentioned, silver was fluctuating, and the government, there are a lot of reasons behind it, but the government put arrows next to the date to point out that these coins had slightly less silver in them than the coins they minted previously. And they used that variety. For the first 3 years, they put arrows next to the date, and then they continued making the coin. In 1873, they put arrows by the date again, and this time they did it when they took the silver content back to the original amount. So 1853, they lowered the amount of silver in silver coins in the dime, quarter, and half dollar. And in 1873, they raised the amount, so they put a little more silver back in the coins again. A lot of that was, gold and silver still fluctuated back then, and there were times where the silver was worth more than what the coin was, and people would simply melt them down and sell the silver. Same thing used to happen to a lot of gold coins. People don't think about that, but when the coins were made out of silver and gold, if they were worth more than the face value for the metal, they would just get melted down, and there's cases where people made fortunes doing that, and a lot of coins would get sent to Europe and melted, and that would cause that actually in some cases actually caused coinage shortages in this country because people were simply melting the coins down and selling the metal. 1873, like I said, they increased the amount of silver in the coins again, and they put arrows by the date to make people aware of that. Now, in 1965, when they took all the silver out of coins except the half dollar, they tried to hide it. They put the copper in the middle of the coin. They put nickel on the outside of the coin. They tried to just slide the coin by and hope nobody'd really notice. So I guess the government was a little more honest back in the 1800s than they were in the 1960s when they tried to hide all that. The last thing I wanted to mention to you today was I've been looking at the metals. As you know, I try to watch the metals for indications of whether you should buy, sell, hold. And I can't predict the price of gold or silver or platinum or palladium any more than anybody else, but every now and then something catches my interest. Palladium today fell just slightly below $700. It's the first time in a long time it's been that low. It topped out about a year ago at about $900 an ounce, and that was in the face of the other metals falling dramatically. So I'm looking at palladium right now, and I think it's a metal you might want to start considering. If you already have gold and silver, palladium is a metal. It's in the platinum group of metals. It's a very rare metal. They mine 6.3 metric tons a year, and they or 6.3 million ounces a year, I guess. It comes out to 196 metric tons a year. But to put that in comparison, they mine just shy of 2,900 metric tons of gold every year. So gold's considered rare with 2,900 metric tons mined, and here's 196 metric tons. I can't say that, metric tons mined a year. And it's a very valuable metal. It's very rare. The two main uses of it are jewelry and then, of course, industrial uses. It's used in catalytic converters. Now, one of the things I like about it, right now it's down in price simply because the auto sales in China are very low. Sales earlier this year were 3.9% increase in the first quarter in China, and they've slowed down to, I think, 1.2%, and that's affected the palladium market. But when I look at China, and I've talked about this before, I think it's just a sleeping giant. I have a tough time thinking that China started this road to westernization. I don't know how else to say it, and increasing their standard of living and buying all things Western, like cars and real estate, and all types of products, that I have a hard time thinking they're just going to go back to using horse and oxen again. So when I look at China, they've got 4 times the number of people as the United States, and very few of those people own cars or own anything modern at all. So to me, it's just a matter of time. And, if you look at palladium, back in 2001, palladium went to $1,100 an ounce when they started first using it in catalytic converters. It's something that when the demand picks up, they just simply can't increase the supply of the metal. So 42% of it comes out of Russia, which I think that's dangerous in and of itself, and another 38% comes out of South Africa. So the bulk of it comes from 2 very unstable regions in the world. And I'm not saying it's going to take off tomorrow, but at under $700 an ounce, I think it's something that's very, very worthwhile to pick up. And it looks like I'm running out of time. If you want more information on that, call the office at 480-553-5282. If you'd like to get a portfolio review or ask any questions about coins or metals, call the office, and we'll be glad to talk to you there.